What's going on to the AMC Stock family? In today's video, I am very excited to be talking about how Citadel is preparing right now for their liquidations as we speak. And so right off the bat, let's go ahead and take a look at all these rankings because we know that a mother of all short squeezes is coming. It's not a matter of if it is coming, it is a matter of when it is coming, the short squeeze 2.0. And so right off the bat, we have the Lucid rank. We have the ticker symbol as well as the Lucid rank, the Lucid score, the short interest shares, the short interest ratio, and the float. Float is very important. Many people are asking how come AMC and GameStop, how come GameStop has a higher price than AMC? And that is simply because GameStop has a much smaller float. With less float, that allows scarcity to happen. And when scarcity happens, less people are able to buy an underlying equity. This contrasts because AMC has gone in dilutions. And with dilutions, you are adding more shares in the market. And so then more people are able to buy that underlying equity. Whereas GameStop, that is not the same scenario. And so we're not talking about the float though. That was just a question that I was going to answer because many people were wondering. And so if we go to the Lucid rank, this is about the short squeeze. So we have over here, for those of you guys that have been continuously updating yourself with the due diligence by watching these videos, you know that the last time we talked about this, AMC was ranked 4th in this group, in this Lucid rank group. Now it is ranked 2nd. That means that something has changed. And I know exactly what changed, and I'm going to be explaining all that in today's video. So the last time we checked, AMC was at the high price. It was around $50 a share. Now it is around $40 a share and is actually coming close to that high $30 share level. And so what this means is that more people are selling AMC, and this is very much evident throughout the short interest shares. The last time we talked about this, AMC had a short interest of 94 million shares. Now the short interest shares is hovering around almost 96 million shares. This is definitely in contrast, and something has happened since then. And I know exactly what has happened. It is about Citadel, and it's not just Citadel. There's so many other financial institutions and hedge funds that continuously decide to sell the stock. So if you guys are wondering why AMC is down on the week, then that answers your question, and we have more proof to back that up. And not only that, not only do we go from rank 4th all the way to rank 2nd, but now we also have a new ticker symbol, and we are just one step away from being the highest short interest ticker symbol. And this is actually not negative whatsoever. Many people believe that when you have a stock that has a lot of short interest, that is negative. That's not the case. A lot of this negativity that comes with the short interest, not a catalyst play. This is not related to the fundamentals. This is talking about just the short interest shares. This is going to benefit and help AMC because this is going to allow another short squeeze 2.0. You cannot have a short squeeze if there is no short interest. As long as we have that interest, which we do over here, this will allow the probability of us having another short squeeze to be much, much higher. And this is not just my opinion. This is actually the opinion of a former New York Stock Exchange trader as he buys shares of AMC, Affirm, and Moderna on Tuesday. Let's see what he has to say. This is actually very quick. But anyways, veteran trader David Green was back live trading on Benzinga Tuesday morning, and the longtime trader made some trades in some big name stocks such as Affirm, ticker symbol AFRM, which actually had a partnership with Amazon pretty recently. And over here we have AMC Entertainment, ticker symbol AMC, and Moderna. And so AMC stock had a strong day on Monday, following Walt Disney Company's announcement that the rest of the 2021 movies for Disney will exclusively have in-theater premieres. This is very bullish news, but we already explained that in a previous video, so I'm not going to waste your time by re-explaining it again. And so on Tuesday, AMC stock opened down about 1.5%. And so David Green put out an order to buy 100 shares of AMC at $49.20 a share. He is losing on this position right now, but he still has that conviction because here's what he had to say. So a former New York Stock Exchange trader said that I love this level right here in AMC. This is setting up to be a nice trade. And so the live trading with David Green is a morning trading show in which David live trades the open on Benzinga. And then over here we talk about Moderna and Affirm, but I'm not going to talk about that because again, this is just related to ticker symbol AMC. All I wanted to mention was that some people they are saying that they are losing in their AMC position. It's not just you. And don't worry about it because we have a veteran trader. Veteran traders have been trading for at least a decade. If someone has been trading for this long and they put out a buy order of 100 shares at $49.20 a share, and the price right now is hovering around $43 to $44 a share, don't worry whatsoever. And my conviction as for why AMC is probably going to have another short squeeze, remember, this is just my opinion because I truly do believe that AMC will have another short squeeze. It is not a matter of if for me, but it is rather a matter of when. And so over here we have the AMC Entertainment short interest ratio and short volume. The current short volume is again 95.94 million shares, almost 96. This number has changed. And so before we were at 11% for the increase of change since last month. Now we have actually lowered. So this is going to be quite beneficial, but at the same time, it's not the best type of news because we want to have a lot of short interest going on for AMC because as I mentioned before, more short interest allows the probability of AMC to have another short squeeze even higher, that much higher in fact. And so over here we have almost a 4% change since the previous month, still a change in the positive direction, but not as much as the 11% that we knew from the last time I talked about this. And so the short interest over time As long as we have short interest over time and as long as we have a clear trend, that's good in and of itself. And we do have that trend from $2 billion all the way to almost $6 billion shorted in this one equity. That is absolutely amazing. And again, more short interest allows more of a possibility for AMC to have another short squeeze. And so here we go again, because Citadel Advisors LLC, August 17th, again, 48.1% increase, almost 50%, and they have 476,486 in this position. Now, I'm not sure how much this means to Citadel, because one of their other groups, Melvin Capital, they're actually quite underwater by almost 50% in their AMC position. And so Citadel is trying to help out Melvin Capital, but at the same time, they continuously still decide to have selling positions in AMC. Now, you have to remember that a lot of these hedge funds, they have millions upon millions of dollars. And while this is not a $1 million position, you still cannot invalidate that Citadel is still trying to sell this stock. And for what reason, I'm not really sure, because with Melvin Capital, they lost one. So I'm not sure why Citadel is trying to repeat this and have a 2.0 of a sell-off unless they truly believe that the AMC stock movement is not strong and not resilient, which is why they continuously believe that they will win in the end and that AMC will fall extremely low, which I do not believe. But again, these are just our contrasting opinions. This also does reiterate my conviction even more, because does anyone still even care about the fundamentals? Well, new investors aren't as worried about basic market fundamentals as their predecessors, with average long-term interest rates expected to continue trending down and growth-powered tech companies entering the market rapidly. Discounted cash flow models are growing increasingly dubious. The fundamental values that stock models provide investors are now much more of assumptions and bias than reliable near-term earnings. Due to the low interest rate environment, investors are being forced to forecast what kind of cash flows a growing tech company will produce 5 to 10 years out, which is nearly impossible to accurately estimate. The further into the future you go, the closer to guessing it becomes, and nonetheless, fundamentals will become progressively more meaningful once the Federal Reserve starts pairing its balance sheet and subsequently initiates liftoff. Now, they do talk more about fundamentals, but I'm just going to end up reading this last paragraph of the article just because, again, this also reiterates that fundamentals are not the main story about why investors are invested in various underlying equities. So this is going to be beneficial for AMC, not really a lot of those index fund stocks that make up a large amount of the S&P 500 or a lot of these other indices. But again, since this is about AMC, this is the type of news that will help, because even this article mentions that fundamentals are not everything. And so the final thoughts are that fundamentals are still the backbone of this financial system in the long run. Again, in the long run. So remember, AMC does not care that much about the long run. Rather, many investors are focused more on the day-to-day basis for this equity. But the attitude of the market plays a vital role in the short-term price action, exactly what I just mentioned. And relative valuations are still important to institutional investors and traders. This may be why Citadel continuously decides to sell AMC. You can see the evidence of this in the back and forth rotation that shows money managers chasing weakness and selling relative strength. The seesaw trading between growth and value sectors we've experienced this year. Exactly this. So many investors and so many market makers, they are confused about what type of investing approach they're going to take throughout this year, because AMC and GameStop, they did crash the market sometime in 2021, if you guys remember that. And so the next generation of market participants are flooding into digital brokerage. Public equities will never trade as they did before, so it is essential to understand the changes in order to adapt. So I'm going to end it off here because this captures exactly my thoughts. Let me know in the comment section if you guys believe that the stock market has permanently changed ever since the introduction of AMC and GameStop that had a lot of retail trader attraction. I continuously buy and hold AMC as well. Let me know in the comment section, what are your investing plans for AMC? Are you still going to be a buyer, or are you going to start selling? And also, speaking about buying or selling AMC, I'm actually going to start increasing my position in AMC substantially once we get to the $42 a share price range. Around that range, I know that right now we are around $43 to $44 a share. However, the reason why I'm waiting for $42 a share is because this is where I see a lot of demand going to be coming in. Why is this going to be the demand zone that I'm going to be looking for? Well, that's because we have two candle wicks represented right over here on September 3rd and also September 2nd, where there was a lot of demand, and this started a movement to the upside. These are the type of price actions that I want to see, because this will indicate there are a lot of buyers. And not only that, we also do have the green volume bars indicating that people were showing up, they were present, and they were there. And we are just quite a bit off from this demand zone over here. However, we did break it. I don't think that we will break this time around, because AMC has much more strength than we did before. And also over here, we do have quite a bit. We were actually lower over here. This was on June 11th of 2021, so we were actually just even a little bit lower. So if you wanted a concrete demand zone with a lot of resilience, then I would actually say possibly even $41.88 a share. We had it once, we had it twice. This is on July 12th of 2021, and we also had it just a bit over here around this trading zone right here. And so this trading zone is going to be marked by this box. Hopefully this gives a clear explanation as to why I'm going to be waiting just a little bit before I start increasing my position substantially, because I do see a demand zone just a couple points away. I'm not saying that we will go to $42 a share, but if the opportunity presents itself, this is where I'm going to be buying a lot. And so with that being said, AMC Stock family, thanks again for watching, and I'll see you guys next video.